Hi, welcome to Investment Insights by Shakur Investment Group. The idea of this podcast is to get people onto the podcast that have done what they're talking about, have been in this space for a very long time, and giving people an opportunity to access different types of opportunities out there in the market. So we want to bring people on board who are experts in their field, and hopefully we can provide those insights to the industry that otherwise we want to get access to them. So thank you, James, for coming on the podcast. James is from Debretts. It's a corporate finance firm. They also do private equity and advisory, as well as advise on a lot of working capital facilities and things like that. And they've been running for a very long time. They're based in Solihull, and their name speaks for itself, and their reputation speaks for itself.
I don't know about that, but thank you very much for having me. It's a pleasure to be here.
Oh, brilliant. So do you want to give a brief intro as to yourself and your partner at Debretts? But it'd be good to get an insight into you and about yourself as well.
Yes, happily. Thank you. I think your introduction was spot on. Debretts is an investment and advisory firm. We try and do both. We have to be quite careful about making sure that there's no conflicts there. Mm-hmm. We haven't been going for all that long. Debretts as a company has existed for 200 and something years. I can't remember. I really should know. But lots of the things that it used to do are sort of losing relevance in today's world. Mm-hmm. And I set up a new business that got the interest of the gentleman that owns Debretts. And he allows us to call our business Debretts. He's now my chairman. And the investment and the advisory business has been going for just over 2 years now. And so far, so good. Mm-hmm. It's an interesting market, as you know all too well. Mm-hmm. But we've done, how many have we deals? So in this calendar year, we'll have done advised on 15 deals, wow. Invested in 2 companies, and we've just launched a 30 million fund to go and invest in other companies.
Well, how did you get into all of this? Like, what was your story as an individual getting into corporate? Because you've obviously got an interesting background, interesting journey for you. So I'm curious to learn more about it.
It's a desperately important background. It's one starting in accountancy. It doesn't get any more boring. I trained with PwC years and years ago, and realised I was never going to be a very good accountant. I didn't have the attention span. I saw tax as a challenge or a negotiation rather than a strict set of rules. So I didn't give my clients particularly great advice. So I left that as soon as I could. I didn't really know what corporate finance was. Mm-hmm. And then the recruiter said to me, there is this thing called corporate finance where you sort of have to be an accountant to do it, but it's an opportunity to make more money than an accountant. I thought, brilliant, I'll give that. So I haven't looked back really.
Wow. Yeah. And in terms of the current market and where it's headed, what are you seeing from your sort of expertise? What are the trends? What are the downfalls? What are things that are going really well and what things aren't going so well?
It's a good question. For our clients, I would say that the opportunities and the challenges are very much differentiated by sector. Mm-hmm. We were chatting earlier on about some of our construction and house building clients. Very tough for them at the moment, mm-hmm. But the good ones acknowledge that and accept it's part of the cycle. Mm-hmm. If you go through a period where interest rates go up, they know that new sales of new properties are going to be low, and they plan for that and they're okay with it. But the trading is not going to look as good as last year. And some people are panicked by that. But some people realise that's just where you are in the cycle. So construction, house builders, developers, contractors, we've got quite a few clients that are in those sectors, and they will be not performing as well as last year. We've got some tech companies which anything doesn't faze them. They just grow exponentially and they're doing really well. And then there's, being in the Midlands, we have lots and lots of industrial and engineering businesses, and overall, most are fine. again, it's the ones that have planned ahead and can learn to live with interest rates, which are, a new feature really for lots of people which have been part of the business environment for 10 years.
You go from tech to very traditional businesses. If, as a fund, what do you guys favor more so? Because tech is a complete different kettle of fish. Like, it's a completely different thing. The valuations on some of the tech businesses are through the roof, and then you've got the traditional businesses that are a little bit more stable. They've built over a couple of decades, and now they're looking to exit. So as a fund, what you guys why tech, and then why on the complete opposite spectrum, why the traditional?
As an advisor, we try to work with good businesses regardless of sector. As an investor, I think it's critical to only look at things that you understand. And that's one of the only rules we have with our ultimate source of money, actually. They have to understand it and we have to understand it.
Okay.
My understanding is normally the determining part of it, the main filter. So for that reason, when we're investing, we tend to look at easy to understand traditional things. Because our money is all private wealth. There's a bigger focus on making sure we don't lose it. So we're less interested in the risky, high growth, but potentially larger than normal risk to fail. We're much more interested in cash generative, stable, yield. That's okay. In fact, that's probably preferred to capital growth.
To the people who do not know anything about M&A or merger and acquisitions or buying businesses, why in this current market, why in general, do investors look at, why should they be looking at M&A as a strategy for themselves, or anyone that's involved or investing into a fund or something that touches M&A? Why should that be attractive to them?
That's a great question. I think that the answer for me personally would be, why would you want to invest in private companies? And let's call it private equity. You'll be able to answer this better than me. Why do all these trusting clients of yours give you all their money to invest on their behalf? I think people are looking for a bit of excitement, a bit of fun, interesting things to look at. And ultimately, people like to think that their money is working on their behalf. When they go to bed at night, they put their head on the pillow and their money is making their money somewhere. And the returns you can get in private equity, if you invest at the right time of the cycle in a nice business with a good team, you have the potential to double, triple, quadruple your money over 2, 3, 4 years. And there's not many other opportunities in life you get that. Would you agree?
I can 100% agree on that. I think in although we're across property developments, care and M&A, I think the property market, I think a lot of the people who are investing in those opportunities, their money gets tied up a lot quicker. I think M&A and investing into businesses or buying businesses are actually more favorable because you have the element of cash flow or the element of being a little bit more liquid compared to being tied up in a project. There's more that can go wrong, in my opinion, with an asset like property than M&A. So for me personally, I think M&A is our strategy going forward. One of the questions I have is, in the Midlands market, now M&A isn't something that's talked about. It's a very private kind of scene. It's not something that, you don't know who the players are. You don't know who the investors are. Even the people who are in this space don't talk to each other.
No, they do.
They do, but yeah, it can be a little bit more secretive. What does the Midlands have to offer from an M&A point of view?
All investors have different risk profiles and return profiles. Some love the idea of trying to, double, triple, quadruple your money, but understand the risks that you might lose it all. So, there's my chairman that I mentioned earlier has a rule when he was in private equity: do 10 deals, 3 will go really, really well, and you'll quadruple your money. 3 you won't see any money back from whatsoever, and the remainder will do okay. So the secret is to make sure you do 10 deals, analyze, do as much due diligence as you can, but don't for a minute kid yourself that you know which 3 are going to be the superstars and which 3 are going to go bust. You just have to, because you'd never do the crap ones, you just have to try and do your deals. And I think the Midlands is a great place to look at businesses to invest in, because we've got loads of different sectors. We have still huge amounts of traditional engineering, industrial businesses over on in the Black Country, in the west side of the Midlands. Tech is springing up all over the place in the city centre, and I know that there's, the latest budget has announced new tax breaks to make it even more attractive to do that kind of stuff. You have media, all sorts of different sectors to attack and filter and get in and research and get involved in if you want to. And also, it's still the second biggest city, I think, in the UK. The population is huge. There's more companies here than anywhere outside of London. So you've got the range and you've got the volume. So I think it's a great place to look for opportunities to invest in.
And on the complete opposite side, what are some of the horror stories that you've come across, or what are the things that have gone really wrong with M&A? Oh,
lots. We still get lots more wrong than right. I think the one of the things I've learned from advising companies and people and investors, and also investing a little bit of money, is yes, look at the company that you're looking to either work with or invest in, but look just as hard, if not harder, at the team. If you believe in them and they're capable and competent and they've got good values and you know they're going to work hard, that's almost everything you need to know. The business is almost secondary. So I think where people go wrong, as I've certainly gone wrong in the past, is not working with the right people in the right place. Because you can have some very talented people, but they're just not right for where they are at the moment. To find people like the gentleman you introduced me earlier, a colleague who runs what looks like a fabulous business. He's clearly energetic, enthusiastic, passionate, but incredibly knowledgeable. If you can find all that, it's like a business moves.
And how are a lot of people buying these companies? I say someone is looking to do a buy and build or wants to buy companies. What is the best way to approach it? Because there's so many creative ways that people can buy businesses. What are some of the favorite ways that you guys would buy a business, or you guys would look at investing into one?
I mean, really, every deal is its own deal. You have you can structure any deal with a blank piece of paper. Most of the times, if it's if it's a private equity firm or professional investor or someone like your investment group, you have to raise a certain amount of money to either buy the thing you're looking at or invest a certain amount. So you can fill the capital structure with debt. You can go and borrow money from banks or other institutions who will lend you money to go and buy things with. Mostly, if you want to convince a bank or a high net worth or someone who's got some money to invest alongside you, you have to be prepared to take the risk as well. Not forcing other people to do that.
Makes sense. And I think to kind of focus on some of the sectors, why is the care sector being something that has become more popular over the last sort of 12, 24 months? It's been unpopular for the last few years, but like, why is it more of a thing in this market going forward?
You keep asking me questions that you're known for. I feel like this is an exam. I'll give you a bad answer, then you can give a good one.
All right, cool, go for it.
I think you could do lots of analysis on this, but the ultimate conclusion you probably would keep coming back to is we have a population which is getting older and therefore sicker. And you can have short-term trends, But ultimately, it's a bit like house prices. It's a one-way bet over the long term.
That makes sense. Okay. No, that's interesting. I think in the care sector for us, or why we choose the care sector is because it's just government backed. It's who pays the care sector, and oftentimes that's the security in it for us, is the fact that you're getting paid from the local authorities and from other local authorities across the country, so you know that you're going to get paid. And if they do go bankrupt, there will be people, those payments will still continue to happen, and that kind of provides that extra level of reassurance for our investors. In terms of,
I read an interesting article recently on that. It said if you want lower taxes, if you really want lower taxes, get healthier, because that's where your tax dollars go, and will increasingly go into care homes and other private sector people who will
make
need money to look after you when you're old.
Yeah.
So the fitter you can stay for as long as possible, the less that will cost you.
What are you guys looking for as a firm now going forward? Like, what is it that you guys want more of in terms of opportunities? Or if people could reach out to you, what would they reach out to you for, and what can you help them with?
We would love to work with companies, investors, management teams, private individuals who want to get involved in M&A. Maybe they want to sell their business. They want to raise money to go and buy another business. Maybe they run a company that they don't own, but they want to. You mentioned earlier that the M&A world is a difficult one to access. I would really encourage anybody to not think like that. And if you're thinking about doing any of those things, please get in touch with us. We'd be delighted to sit down, have a cup of tea, and talk about it. Really, we're looking for passionate, enthusiastic people who want to do some kind of deal which is going to make money, be fun, and is something that's going to be exciting for us to get involved with.
And what's one piece of advice you would give to anyone, or a few tips you could give someone who's looking to do a buy and build? So they're a business at the moment, they want to buy additional businesses going forward. What advice would you give to them? Or what few tips would you give to them to help them on their journey?
I think I would say have a strategy. Lots of people do a buy and build because they want to grow their business to a certain size and then sell it. Normally, not always, but normally bigger businesses sell for bigger multiples, as they say. So a company that makes £1 million of profit might be perceived as relatively small and therefore only worth 4 or 5 times that 1 million. It's a value of £4 or £5 million. Business that makes £10 million, a buyer would generally perceive that to be bigger, more robust, more defensible, can roll with the punches a bit more. So it might be worth 6, 7, 8 times 10 million. So you get disproportionately more value for bigger companies. So when you're doing a buy and build, you're trying to access that greater multiple on your profits. But rather than just going and buying anything which gets your profit up, it's a bit like property development. Don't just add extra rooms for the sake of it. Have a plan in mind of what you want the end product to look like when you sell it. So you want to build a £10 million profit business, decide what it's going to be really good at, what market share it's going to have, who's going to lead it, what it's going to do, why it's going to be special, and then only buy things or only build rooms that are going to get you there, rather than just add more profit for the sake of it.
And what other ways can you mitigate the risk when it comes to, for buy and build strategies? What are some of the things that you could do to mitigate some of the risk?
I think that lots of buy and builds go wrong with integrating different teams. So I think it would be a sensible idea to, when you acquire a target, when you acquire another business and you make it part of yours, have a really careful look at the different cultures, processes, systems, people, how they do things, two companies can work great on paper together, but if it's going to operationally and culturally be difficult to fit them together, the reality would, I would suspect, normally be it's harder than you think to do that, and more expensive and takes longer. So if it looks difficult, it probably will be, even if it's a great deal.
Makes sense. And what do you envision for the future of M&A? Like, how is M&A as an industry changing?
That's a great question. I think AI is the thing that everyone's looking at, thinking, what's this going to do to the industry? And the answer to that, I do not have a clue. I suspect you've got a good answer to that. But what will M&A look like? I don't think it's changed all that much over the last 20 years. And I don't know, this is probably wishful thinking. I don't see how it might change over the next 20.
Why change something? Why change something that works, right?
Well, I don't know. It doesn't always work, does it? It's a good question. What would you expect change to look like?
For me, M&A is I think you're going to have a lot of people from an entry level point of view coming into the industry. There's going to be a lot of new players. There's definitely going to be more people looking to sell. I think people understand that running a business is not easy. It's not the most simplest thing to do. And I think people will be selling early. You know, people have come a little bit more accustomed to the VC tech strategy of okay, you start a business, you run it for 5-7 years, you get to a good valuation, and then you exit. I think more and more there's going to be more and more people who make money from doing just that. But I think M&A is, a lot of people would deem it as a risky investment. I think over the years that's going to be more of a safer investment for a lot of people going forward, because the cash flows there, the contracts, the agreements, the profits are there, and it's going to be a little more tangible for a lot more people. And I think the accessibility of M&A is super important. Like, I think how accessible M&A is to business owners, to investors, to people is going to be. I'm interested to see how that evolves, especially outside of London. I think London, this stuff happens day in, day out. I think people are still yet getting used to the idea of that taking place outside of that, or the type of wealth that's been built in the Midlands region. I think that's going to change.
The startup point's an interesting one. Lots of people know somebody who has started a business which has gone really well very quickly, and they've made lots of money out of it. I don't know if there are going to be the same number of people trying it for themselves in the future. I don't know what the access to funding for the startup will look like.
I think it's a lot easier to buy a business than it is to start one. I think I've gone off the view now. I think when I first started in business, maybe 14 years ago, I was in the view that, I'm going to start, every time I have an idea, I'm going to click my fingers, I'm going to start a business, right? Yeah. But when you get to a certain level of, once you've done our exits, or once you've exited a few times, or once you've got a good couple of years under your belt from an experience point of view, I think you get to that point where you're like, I'm just going to go buy them. It's a lot easier. So it's interesting, because I never thought I'd be in this position to be able to do that. But I think it comes with experience. I think you have to be a business owner or someone who understands how to build something. Those people will be more successful at M&A than the people who are trying to do it for the first time.
Yeah,
there's going to be a lot more advice needed to people who are starting off in their journey. I think there's a gap there.
Okay, that would suggest you think there would be fewer startups.
Yeah, I 100% think so. I think startups I think people are coming to terms with the fact that it's not as easy as people think it is. Even taking on capital, like, I've recently met with a few people who have taken on capital from investment firms in the Midlands, and they've got to the stage where the terms of those contracts and the pressure of performing to the investors is too much for them to handle, and that's adding pressure to them.
Yeah. And there is a perfectly well-trodden, good route available to people, which is go into an industry that you are interested in and you think you could do well in. Go and work for a good company. if you do well there, you will become so important to that company, they won't let you leave. And if you're that important, you can buy it. That's what the private equity buyout world exists to do. It provides money to people who are so important to their business that it can't manage without them. And they want to buy it, but they don't have the personal funds to do so. So that's what private equity investment is. So the alternative to setting your own business up is go and run one and then buy it from its original owner.
So do you think careers are now changing? Do you think people will stop working for the top firms in the city and start working at the mid-tier boutique type of businesses that they can eventually buy out in the future? Do you think that's going to be a trend going forward?
I think so, yes. I think so. I think increasingly people care more about their lifestyle and are less worried about the brand, the size of the business they work for. They care more about what it does and its values and how that impacts them and what it means for them. And also, yes, maybe if people aren't going and setting up their own businesses, they want to work in smaller firms that they one day run and then perhaps buy. That's, I think, happening a lot in professional services.
Right.
Law firms and accountancy firms. In generations gone by, everybody that went to work for an accountancy firm or a law firm wanted to one day be a partner. So they'd go and work really hard and hopefully one day become a partner and have a share of the business. And the bigger the law firm, the bigger the accountancy firm, the better. I don't think that's the case anymore. I think people want to work for a brand that they resonate with and it be smaller and manageable and a quicker and easier route to the top, which may not involve ownership.
Brilliant. I think we'll end on that positive note. I appreciate your time. Thank you for coming down.
It's been a pleasure.
And I look forward to working with you as well over the next
I
few
hope
years.
so.
Definitely.
Let's do some deals.
Sounds like a plan. Thank you guys for listening. I hope that was insightful. Again, we're trying to bring more and more valuable content to our viewers, to our listeners, to the people that we are engaging with on a regular basis. And hopefully this gives you a little bit more of an insight into the world of M&A. Stay tuned for our next podcast.